The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the terrific Thursday. I believe today is the September 26th terrific Thursday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Hey, let's have an extraordinary one. Yep. Let's have an extraordinary day. And the easy way to do that is to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Now, today, you and I, we're going to go check on the circumstance of these markets. We're going to go figure out what those bulls and bears, what those buyers and sellers are communicating to you and I just past 1 o'clock in the afternoon. I do want you to know that I'm absolutely grateful for your presence here, but much, 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 much more important than that. That's too many muches. But it is what it is. And truly, much more important than that, for this next 60 minutes, or approximately 60 minutes, I'm here to serve you. So feel free to give us a call at 877-927-6648. If you can't call in, no problem. We've got you covered there. Let those fingers do the walking. But do them early. Let those fingers walk early. Send me an email, steve@tfnn.com. If you'd be kind enough to put radio show question in the subject heading, that would be great. Of course, in our Tiger's Den, well, any ping will do. So let's go ahead and get this show started on terrific Thursday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we got the Dow trading off 62 points. That's 0.25% to the downside. S&P's off 9. NASDAQ 100 off 48. You've got the Russell down 1%. So that is the leader to the downside percentage-wise. 15 buckaroonies there. Spot volatility index trade out at 1636. Keeps going back and forth above and below the 50-day exponential moving average. We'll take a look at that. It's trading out at 1636. Gold is flat. It's up 60 cents. We'll call that flat. Silver's not flat. It's down 1%. 20 cents to the downside. Light sweet crude off 42 cents. Lead the charge to the upside. Let's have one of these. Let's crack open Samuel Adams. Samuel Adams. Boston beer, though. SAM's a ticker symbol, up 16 bucks, nearly 5%. Beyond Meat up 13 bucks, up 10%. You can't get me to taste Beyond Meat. It's beyond me to figure out eating Beyond Meat. But that's just Stevie. Have at it. Go for it. NetEase, ticker symbol NTES, is up 8 bucks or 3%. Amazon is off 31 bucks, nearly 2%. FactSet Research down 11% or 30 bucks, and Booking Holdings off 18, just light of 1%. So a number of questions came in. Some came in late last night, early this morning. And so I want to get to those. And I apologize, I didn't write down the names or anything. But one question was, hey, can I go over my short-term charts again as I have the last couple days? This individual is trying to understand Stevie's techniques out here. So here's what I'll do. I'm just going to put up the ES Mini. Now, this is a blank chart. So I remember the days looking at a blank chart, trying to figure out what in the Sam heck does this mean? How would I know when something is topped, when something is bottomed? What should we do? Is the chart or is the market, whatever we're looking at, bullish or bearish? So that's a beautiful thing. We all start with this blank chart. So how do we know? So there's several things. I'm not going to say that this is the priority with regard to 1, 2, 3, or what have you, but there's several elements of a chart, no matter what it is, no matter what time frame, that you and I are looking for. The one is, can we identify whether the chart, the instrument itself, is making a top or a bottom? So one of the tools that I created many years ago is which I affectionately called, I call it the Rhodes Momentum Indicator top and bottom pattern out there. So that's the first thing that we're going to put up on the chart out here. And I'm going to go ahead and move the bottom portion, squeeze it down. We don't need to know that. And if we take a look at this, this is a really cool tool to be able to help you identify tops and bottoms. That's really what it's all about. That BS of sell high and buy low is just that. That is for somebody that can't time a market. Instead, I'd rather you figure out how to time a market. Now, when you see these patterns out here, what's really important is you need to understand your P's and Q's. That means your bullish and bearish reversal candle or candles. Because it doesn't have to be just one, which would be a hammer or shooting star. It could be two candles, which are required for a bullish or bearish engulfing or bullish or bearish sash or piercing candles, and you can have 3 or 4 or 5 candles that make up a pattern, such as what we refer to as a 3-river evening and morning star, but that can form over 4 or 5 bars. So you really want to know your P's and Q's. I don't even know where I get that stuff from sometimes, but you need to know your bullish and bearish reversal candles. Now, the cool thing, just with this pattern, this one pattern alone, what we knew yesterday, let me get my cursor out here, what we knew yesterday morning, and it was about 5:30 because I had some things I had to do early, and we're get the newsletter out early, was that the market was, and this was after the market was careening lower the day before out there. Remember, the spot volatility index was up like 13, 14, 15%, whatever the number was. What this did was this said, shelve all that stuff. What's the market doing right here, right now? And what it was doing was it was forming a bottom. Now, the beauty about that bottom pattern, the beauty about that was it was doing that when we already had the day before signal of that one-day rate of change greater than 10%. So what we knew to be looking for some type of bounce/bottom area. Now, the beauty of this tool, this pattern, was that this morning when I sent the newsletter out, and that got out by about 7:30, I believe, but when I was up in front of my screens at 5 o'clock this morning, what I knew was that one big push that moved to the upside was done with less relative strength out there. Again, the potential makings of a top, of a Rhodes momentum indicator top. Now, look, we'll just go add our bullish and bearish reversal candles out here. So let's add those to it. Let's decorate the chart. And that is really a key. This is how the market communicates to us. And what we'll see out here this morning, let's come back to this morning. So the question is, would it have helped you to know, depending on the style trader that you are, that the market was forming a top this morning at 7:30? Well, it was really at 6 o'clock was when we saw that first bearish engulfing candle, followed by a little shooting star. Then we have another bearish engulfing candle at 8:30 this morning. The market proceeds to move lower. Would that have assisted you? Well, hopefully it would have. And remember, you use this for all instruments, all time frames. You don't think this pattern is valuable? Well, I think it's extraordinarily valuable. But it's not the only pattern that's valuable to you and I. Because what we also need to understand is where is support and resistance. That is also very key. So we use a couple of different tools for that. One of the tools that we use to identify support and resistance, it's really called breakout support and resistance. That's right, and breakdown. So if we break down resistance, breakout support is our TD setup 9 count pattern. So when we come back from this breakout here, let's add that to the chart. And my question to you is, why did price stop where it did at about 11 o'clock this morning? Something to think about. We'll be right back.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. So we're taking a look at the ES-mini. This is a 30-minute time frame. This is for one of our listeners that listens to the show, clearly, obviously, and was interested in taking a look at how it is that I call the markets, what the tools are, in essence, that I use out here. And so over the last couple of days, we've been looking at the short-term time frame charts because they've assisted us in identifying what the market's intentions are. So when a market forms a top or a bottom, the next thing we want to understand is where is support or resistance. If it's formed a bottom, where is resistance? If it's formed a top, where is support? We want to understand those levels because, one, that is likely where price is headed to. And then the key question is does support or does resistance hold? Because if it doesn't, it communicates to us the next intention of the market. So one of those things that we take a look at is we like to use that TD setup 9 count. It does a couple of things for us. One, it's a topping and bottoming signal pattern, and the other is that it provides us with support and resistance. Let me extend the lines just a tad here, because what you're going to see, and you already knew the answer to that question, it was kind of like one of those misleading questions that our congressmen and women do all the time. It just drives me you fill in the word crazy out there, but I'm not. You know, this was not a I'm going to trap you type of a question out here. But so you already sort of knew the answer to the question out here. Let's extend those lines. And where did price come back to? So this morning at 6 o'clock in the morning, when I'm writing the newsletter out here and we're identifying these topping signals, was to allow traders, subscribers to anticipate where the market was going to head to. And what we said was that I'm going to add the market profiles out here because they're also helpful. But the level was 29.6425. That's where price would pull back to. That's its ultimate breakout level. It's still the breakout level today on a short-term basis to help you and I understand what the market is doing and where price actually pulled back to. I got to close that window. Let me close that. Let me see what was the exact price out here. 29.6425. Now, look, the 25, the contract works in a series of 4 ticks out there. So you got 0, quarter, 50, 75, and back to 0 out there. So, you know, so don't the quarter tick, don't think of it as in terms of pips or pennies or what have you out there. But if we do take a look at, so all that's transpired in the market on a short-term basis is topping signals, price coming back to support. Now, look, there's other support levels that we can look at, the TAS market profiles. But in essence, the 2 little tools here that I've shared with you are things that you can do on your own. On your own out there. You may not understand the patterns. Just subscribe to Mastering Probability. Gain access to the archive workshops that are out there. How about the newsletter to handhold you along the way that are showing these patterns all the time so that you can then determine and identify whether this would be valuable to you or not. Now, this segues into the question from one of our listeners, if we could go take a look at 2 different instruments. Because he's looking at these instruments, trying to figure out, you know, is there a TD setup 9-count bottom? We're going to do more than that out there. The 2 instruments, so one is CRON, C-R-O-N is the ticker symbol. So as we do with every chart that we analyze out here, we take a look at where is price trading, also in relation to support and resistance. And here come our market profiles. So as opposed to adding them to the 30-minute chart out here, which we could do, is let's just simply go on to another request from a listener, not even I don't even know if it's a subscriber or not, but to take a look at CRON. That is Kronos Group, which we know right now is trading below support on the daily time frame, which would be 1091. That's the bottom of its daily box. It's also trading below the bottom of its weekly box out here. It did that last week when it cracked through 1109, and it's trading with inside its monthly box. That suggests that price could pull back to 836. So what do we know? Unless we can see some type of really good bottoming pattern out here inside of Kronos, it's saying to stay away and to look for $8.36. That's what the market profiles. Now, those of you that are Japanese candlestick aficionados, you looked at the daily time frame chart. I know because I heard you out there, because I have amazing hearing. Well, maybe not. Pretty good hearing. I do listen, though. I do listen. My hearing is so-so. But yes, absolutely a hammer candle out there. But that wasn't the question, was it a hammer candle? The question was, hey, is this forming a TD setup 9-count bottom? So let's go take a look at the daily time frame chart for CRON. And the individual who wrote in is doing a really good job of following the TD setup 9-count. Now, today would be that confirmation. Yesterday was bar number 8. So I don't know because it wasn't really described to me exactly where it would be in the account or not. But yesterday was bar number 8. You got a hammer candle. As long as price today closes below, which it looks like it will, closes below 1029, we're at 927, you'll get a TD setup 9-count. Now, would you take that trade? Would you take that trade? Well, I think we need to investigate even a little bit further out here. And I'll answer that question. The answer is no. I wouldn't take that trade until we at least saw a close above Stevie's red line, which is $9.80. I especially wouldn't do it because we don't have any support down below us until we get to the monthly time frame, which was $8.36. So you want Kronos Group. It depends whether you're an aggressive trader. You're looking for some type of certainty in a market that's always uncertain. What we can say is, yeah, you got a bottoming signal, but you haven't taken out resistance. That's really below the daily profiles or below profiles. What else can I look for support? That's where we use Stevie's red or green line out there. So I'd want to see a close at least above what we'll call level 1 resistance out here. Level 2 is going to be 1091. Level 3, 12.25. Level 4 is 1435. That's where price broke down on a daily time frame for ticker symbol CRON. Now let's just take a look at the weekly time frame chart, just simply so we finish this off appropriately. In the TD setup counts out here, nothing that's active to be worried about, but price did break down below its breakout level of 1171. That tells us lower price. Our eyes immediately go to the set of hammer September candles back here on a weekly basis in November. November of 2018. Yeah, they were all in November of 2018. So that suggests that may be the target. How about a wave count to the downside? Let's do our wave counts. Well, happens to be in wave number 7. That's letter G on my screen out here. Now, you couldn't get a confirmation of wave number 7 until you saw a higher low. So the earliest possibility for a confirmed, what the heck are you saying? For a confirmed 7th wave move wouldn't come until next Friday out there. But the weekly has some potential. The daily has some potential out here. And so I think that the listener is on to something. If we look at the monthly time frame chart, it says, and it shows the 836, the bottom of that bullish structured monthly profile, but it also shows a move below that would be 561. Shows the Rhodes momentum indicator top on a monthly basis, and maybe price really is headed to 561. So here I'm going to summarize it for you. The daily and the weekly have good, strong potential out there. You want some confirmation. What's the earliest confirmation that you would get? It would come from the daily time frame chart, and the earliest signal would be a close above Stevie's red line. As of 1:26 in the afternoon on September 26th, it's $9.80. When we come back from this break, we'll do it in a little quicker fashion. We'll take a look at ticker symbol KSHB. I don't know what it is, but we'll go figure it out. We'll be right back. I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So we're taking a look at ticker symbol KSHB. That is for Cushco Holdings. And the question is did this form a TD setup 9-count bottom out there? So here's what we know. We know that this formed a brand new profile today, and price is trading below it. The bottom of that box was 241, so it's already broken through support, and it's done it with a wide price spread and accelerating volume. Not really what you want to see. So we certainly know that, well, it didn't make a bottom yesterday. But let's go take a look at the TD setup 9-count pattern when we get to that. We also know on a weekly basis, prices below support, the bottom of its weekly profile, and prices below the bottom of the monthly profile. So Cushco Holdings, it doesn't look too cushy to me. But let's go take a look and answer the question. Did it form a TD setup 9-count? And the answer is yes, it did. And it did it 2 days ago, was confirmed yesterday. 2 days ago was bar number 9. Yesterday was the bar following bar number 9. But what price didn't do in Cushco Holdings was get above Stevie's red line out there. That red line value right now is $2.63. So it's not just one set of tools that you want to use and just use it blindly. That would be like me teaching you about the A to B equals CD pattern, which we're going to go take a look at next. So this is my segue into that, and telling you to buy or sell every 1-to-1 A to B equals CD. I promise you, you will never hear those words uttered from my mouth, because that would be bad advice out there. That's not how the pattern works. Sometimes it works like that, like 60% of the time, but that's nearly the flip of a coin. And I don't want to give you the flip of a coin out there. What I want to do is want you to be able to identify when the cavalry, whether they're buyers or sellers, have arrived, so that you at least have a better defensible position, whether it's to the upside or to the downside. That's how we integrate these tools along with how the market communicates to you and I. Look, even when we do all those things, the trade can still go against us, which is why we use proper position sizing, which means that we're using a physical stop on the trade, because none of us, no matter what, don't know what the market's going to do next or the reasons behind it. But we do know how markets make tops and bottoms. We see that each and every day out here as you and I go look at charts. And so we've got enough confidence, enough reliability of the patterns that we use, that if we use them in a structured manner, we will do just fine. And if we use proper position sizing, when all that is said and done out there, even if the trade goes against us, we're going to be in good shape. We're going to survive for the next trade out there. So in the case of the weekly time frame chart, this happens to be from a weekly time frame chart, so it creates a top back here in January of 2019. It does it with a Rhodes momentum indicator top. This happens to be from a weekly standpoint. If a potential for a TD setup 9-count out here on the weekly time frame, but that can't be confirmed until next week. Any tick below the low of this week, and the pattern gets invalidated. It's null and void, the way that Stevie uses the system out here. So, and it's in wave number 6, letter number F on the way down. So maybe it's got some potential, but boy, you're going to see some type of turn or reversal in the daily chart before you're going to touch the weekly time frame signal and what it communicates to you and I. And the monthly chart, I don't think I have anything here to give us any kind of bottoming signal. No, we don't have anything out here. So what's my message to you on Cushco, KSHB out here? Well, to answer your question, it did make a TD setup 9-count. And I appreciate you following that, looking for that. And then what you want to do is you want to be able to understand Stevie's red or red-green line out there, because that's very helpful in understanding whether or not there's a change in trend that is likely underway. And in the case of Cushco, the answer is no. Now, I mentioned the A to B equals CD pattern because one of our other listeners, I'm not back? What do you mean I'm not back? Yeah, I'm back. I am now back. Okay, good. Geez, I hope everybody heard me there. But if you didn't, well, oh well. Everything happens for us. Maybe that was a good thing. But in any event, let's simply go take a look at the gold contract, because that was the question also. Hey, is gold making a TD setup 9-count pattern? And even though today may be bar number 9 of the 9-count, the answer is no. The answer is no, because you see the high needs to take place on bars 8, 9, or the bar following 9. And so far the high is bar number 7. So we don't have a topping signal per se inside of the gold contract relating to the daily time frame, relating to a TD setup 9 count. Now, it's very possible Stevie's green line out here, which price just basically closed above for 1 day, that was 2 days ago out here, that was the extent of a counter trend move. Very possible. And it's possible that there's an A to B equals CD to the downside that's being formed. Let me make sure I grab the exact swing point. I'll do that just by using my wave count tool. So that's going to tell me, what made the high out here. So we've got that. So that's good. And let's go take a look at the potential for what the A to B equals CD pattern would look like. So we know that the low was out here where that B count. We know that 7 is the high. So there would be your 1-to-1 A to B equals CD pattern. But I'm not drawing that in here, telling you that's what gold is going to do. We really can't do that until gold closes below its swing point. The swing point being the B point of A to B equals C to D. And that level is 1490.70. So that's what the pattern would look like. But I'm not going to type that in and say, yeah, it's typed in. But I'm not saying that that is the pattern that is unfolding. What we also have to do is really understand support and resistance. Now, the beauty here inside of gold, if we go take a look at the December contract, what do we know? Well, what we know is price is not broken through the next level of support here. That's the bottom of its daily profile. That number is 1499.50. We've seen that level get tested since the profile was formed on September 13th. We've seen it get tested 3 different times. Each time it is held. If we turn those profiles off, this is the beauty of it. Just like when we started with the blank chart out here, when we looked at the ES mini on the 30-minute and we started populating it with the tools that you and I use during this hour out here, helping us identify tops and bottoms, helping us to identify support and resistance. If we were just looking at this chart right now, yeah, there's tools and ways, the initial ways that I learned to try to identify where price maybe was breaking out and so forth. And you look for volume and wide-ranging bars out there. But I don't tie my shoes the same way today that I did back then. I don't even tie my shoes most of the time, right? Now you put on your golf shoes, you got this little, mechanism. You don't even have to tie. You just have to know how to, righty-tighty, lefty-loosey out there, if you know what I mean. But if we do just simply stay with the program here, Steve-O, if we just simply add our TAS market profiles, well, now we know where support and resistance is. And that's a beautiful thing. So if there's going to be a to B equals CD pattern to the downside, we're going to first see a close below support. And support from a daily time frame for the gold contract is $14.99. But wait, we've got more. That's right. If you order now, we're going to throw in the free shipping out there. And by free shipping, when we take a look at the TAS market profiles, that means we're also going to go take a look at where's the weekly set of profiles. Well, we take a look at the weekly set of profiles out here. If you order now, it's just shipping and handling. Well, $14.89.20. So for those of you that are managing your gold and your mining trades, here's what you don't want to see. You don't want to see it close below 1489.20. For if you do, prices headed lower. What you do want to see is a close above 1550.80. Steve Rhodes with TFNN. We'll be right back.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the tax opportunity zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow's Australia on S&P down 10. So one of our Denners, not a lot of calls, plug the phone line, I'll put it. John in the Tiger's Den is asking to take a look at the weekly time frame chart for the S&P. And he says, please scrutinize the S&P weekly chart and envision a sizable decline that has likely already started. So we're going to use several tools in order to envision that. Why would we envision that a decline has already started? Well, one of the reasons that we could make that conclusion would begin by taking a look at our horizontal trading ranges. That's what we have up on our screen. Since the request was, so it's a daily time frame I've got up there. Is that okay, John? Let me see what happens here. Let me just change this to weekly. Nothing should change, but except it gets all scrunched. I'm probably going to leave that back to the daily time frame here, but I've got the weekly. I probably shouldn't have done that because now I've got to go back through all its calculations. But let's just start with what do we know about the S&P 500? Now, I'm looking at the ES Mini chart out here, so that's what we have up on the screen. But the one thing that you can do is you can take a look at the diagonal line that just simply attaches the highs from January of 2018, the highs of September in 2018, which just happened to stop the advance in price back in 2019. The July highs out there. Now here what you can see is price never made its way back up there in the current time frame, the current months, but certainly we've got the so-called double high. Now that we've populated, it's a daily time frame chart, but we're looking at the weekly horizontal trading range boundary line. So think of it like this. This is also another tool for helping us to identify support and resistance. How do we know that? Now, what I have up on the screen are both the primary, so those of you that are old-time listeners and you're familiar with Bud Rolfe's work, and this, in essence, is a play off of it. It is not the same. It is not exactly this. It is not the same. But Bud would talk to us about primary trading range boundary lines and the midpoints. Well, here are the primary trading range boundary lines as I turn things on and off. Maybe I shouldn't be doing that. Maybe there's just too many. Yep, I should have just left them on. There'll be the solid ones. So the solid ones are your primaries out here. So the very first thing, and the dashed ones are our midpoints. They're in between the two solid lines. So if the question from John was, envision the market moving lower, what's the next target for the S&P S&P via the ES Mini, the price target that we would give John, we would say if you see a close below 29.56, notice that that has been support out here. Price is just trading in between its horizontal trading ranges, 29.56 and 30.16. So in order for us to somehow conclude that the market has already started and is going to continue to move lower, we certainly need to see this level of support broken, 29.56. Then that brings out the next level, the primary horizontal trading range of 28.95. We've seen 15 opens or closes on a weekly basis, even though I've got a daily contract or the daily time frame out here. We've seen 15, so it's a fairly congested area on a weekly basis. In fact, it is the most congested area inside the ES Mini on my chart going back quite a ways out here. So the key level of support there to the downside would be in that 28.95 area. And then below that, you've got 28.35. You have 27.75, which happened to be the low back in August of 2019 out here. So those would be your ranges to the downside at this stage of the game. So that's one level. That's one thing that we can take a look at. Why are we using the ES Mini, Steve-O? Well, the reason that we're using this here is because it makes it easier when we go to the next chart. The next chart says what's going on with regard to those daily and weekly and monthly and quarterly TAS market profiles out here. Now, what we're using is Stevie's synthetic contract. It's a version, not like it's a version of the truth. It's a version that we can use with the historical data so that our TAS market profiles have substantial meaning to both you and I. So here's the very first thing that we know, that we need to know, and that's this. The ES Mini must first close below 29.64. That is the bottom of its daily profile. So in order for the supposition to be correct out there, is that the correct way to say it? Maybe, maybe not. 29.64 is the level that price must break down below, close below. What we've seen out here is a test of that. We've seen a test of that 3 times. Maybe just keep chiseling away, chiseling away, chiseling away, getting ready to. I don't know if that's the case or not. But at the same level, or around the same level, approximately the same level, 29.64 is the bottom of the daily, and 29.50 is the top of the weekly. And if you take a look at where price is trading in relationship to the top of the monthly, that's the lower left, and top of the quarterly, they're all in breakout mode. John, all of the listeners out there, I'm not saying price can't go down lower. But what price is doing on the larger time frames inside the ES Mini is trading above key levels of resistance, and maybe those old levels of resistance become new levels of support. I don't know. I just know that when you trade above resistance, you're in breakout mode. And I know that unless you close below support, you don't have a change in trend. And right now, inside the S&P 500 or inside the ES Mini, we do not have a change in trend. We have topping signals and patterns out there, absolutely. But the real key to the premise that the S&P or the ES Mini is going to head lower, we must see a close below at least 29.64. Then you're going to have to watch 29.50. Then you're going to have to watch 29.06. Those are just the tops of the boxes. So no, even getting back below those on the weekly and the monthly is not really a big deal out there. And then you've got 28.91, which is the quarterly. That's the bottom right-hand panel of our screen. Now you can take a look at the other numbers, the bottom of those boxes. And I'm just giving you the time to go ahead and record those out there. So this is helpful. We can't. Well, you can. I can't. I can't. I would be disingenuous. I'm just the narrator of these charts. I'm not the one drawing these lines in here. I'm not the one doing the math out there. And so for all of you folks that are bears who are going to send me nasty notes out there because you're so good at what you do and I stink at what I do, don't send them. They actually just go to the junk mailbox out here. But I'm not going to be disingenuous to you or anybody else out here. These are the tools that we use to help us identify what the market is communicating to us. Now, let's say that there's advanced tools that suggest that a significant top has formed and the markets are going to move lower into January 28th of next year, which is a possibility. But you now know the numbers that need to be broken in order for that to happen. So when you see those numbers being broken, then you can say, aha, that's a possibility. Where is it that price could go to if we were just going to stick with the S&P? So now I'm going to go back to the S&P 500. We actually never got there. But if we're going to look at the S&P 500 on a weekly basis and try to identify where is support, it's where it last broke out on a weekly basis. And that number is simple. And we started this session today by looking at the ES Mini. And we looked at the topping signal that was out there from about 5:30 this morning that said price should pull back to support, which it did. The weekly support, John, if your conclusion is correct and it's already started, the big price target to the downside, 2570.41. That's in the S&P 500 cash indice based upon its weekly breakout level. We'll be right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. If you're a trader in the market looking for exposure to gold or gold mining equities, then now is a perfect time to sign up for Tom O'Brien's Gold Report. The summer is over, gold is trading back above $1,500, and the 10-year Treasury is hovering at around 1.5%. Tom O'Brien has been writing his weekly gold report for almost 18 years. There's no one that knows more about how the gold market trades and how gold mining equities react. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, Tom publishes his weekly gold report with coverage of gold, silver, bonds, the XAU, HUI, GDX, the dollar, as well as more than 30 different mining equities. As of September 3rd, Gold Report subscribers have 5 active open positions with an average unrealized profit of almost 38% for each position. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up today by visiting TFNN.com.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. So just a couple of minutes here to take on these questions. So 2 folks were asking about Disney and whether or not it is a short out here. So John and Purdy were asking about that. So here's what we know about Disney. And I'm just going to look at the weekly time frame chart for you. And so right now, price is trading below the bottom of its bullish structured weekly profile. The week doesn't end till tomorrow. I don't know where Disney's going to close tomorrow, but if it does close below 131.85, it suggests suggest lower price out there. Is it going to be a confirmed A to B equals CD to the downside? I don't know that either. The reason is because the B point, which is at 131.02, has volume of 43 million shares, and we're at 32 million shares right now. So, and the average daily movement is about 6 million shares, 11 million shares. So maybe it's confirmed, maybe it's not confirmed out there. The other issue with regard to suggesting that you take a short now inside Disney is look at what you're going into. You're going into this wide-ranging bar, one of the wider-ranging bars out there. And that's from the week of April the 8th out there. So always dangerous. So since you've missed the short move, so to speak, out here, what I would feel better about, knowing that wide-ranging bar and good volume that you're coming into, is instead looking to buy the Gartley buy pattern should it complete. Now, maybe it completes at around 123. Maybe it's 119. That's the one-to-one, 1.272. You know, we see the bullish reversal candle when that forms out there, or some other pattern on a daily time frame. So we should really go take a look at the daily time frame. What do we know about the daily time frame? Here's what we know right now. Today is going to be bar number 7 of a TD setup, potential TD setup 9-count pattern. That means on Monday, maybe we'll know whether it's going to be an active, a valid 9-count pattern or not out here. So knowing that we're potentially coming into an area where price could find some support, or better yet, make some type of bottoming pattern, no, I cannot tell you to go ahead and short Disney now. That doesn't mean that it doesn't move lower. I just think the reward, the risk, and going into that wide-ranging bar is a dangerous thing to do. Danger, Will Robinson. Hey, folks, thanks so much for being here. Join us again tomorrow, 1 o'clock sharp, so to speak. But otherwise, stay tuned for 2 great hours. David White, your favorite polar bear, and Tom O'Brien from 3 to 4. Take care, folks.